India's equity markets have stayed resilient despite global uncertainties. But what are the factors that driving this momentum and how should investors position themselves in this environment? To help us decode the trends shaping this month's equity outlook, we have with us Mr. Devinder Singhal, who is a fund manager at Kotak Mahindra Asset Management Company Limited. Thank you for joining us, Mr. Devinder.
Thank you.
So, Mr. Devinder, I want to understand what are the key factors driving the current rally in Indian equities despite global uncertainties?
See, I think first of all, the domestic factors, which are basically abundant liquidity, or the very fact that the government is wanting to drive the growth led by abundant liquidity, falling interest rates, and the capex hopes of a capex revival. This is all fueling that earning expectations going forward should be higher, and this is fueling the market where it is. Secondly, the flows from the US market to the other markets, including emerging markets like India, that is also fueling up. And if you look at the last quarter commentary from the corporates, they're expecting good earnings growth led by volume demand recovery and the gross inflation basically being lower, leading to margin expansion. So all these factors are driving what the current market situation is, and investors are hopeful that things should be good for me.
So, how are you viewing the valuations in large caps, mid caps, and small caps in the current market cycle?
See, today when we speak, we do find the valuation gap between the large cap, mid caps, and small caps, specifically when we are looking at the historic averages. Today, the risk reward is much better in large caps because they're just about the 10-year averages. Mid caps are at a steep premium, uh, followed by the small cap, which is also at a premium, but not so much as what the mid caps are. Having said that, the growth rate expectation or the profit growth expectation in mid cap and small cap is also high. So as long as the earnings growth is pretty good, I think the valuations can remain a bit on the higher side. But as we said, the risk reward to be in favor is now in favor of being overweight large cap than mid cap and small cap.
So what are you suggesting, especially in the case of uncertainties? Should a person look at the higher risk, but as you said, more gain from the large caps, or maybe to be on a safer side with smaller caps?
See, whenever we talk about equities, we are urging investors to look at 5 years and beyond. If you have that scenario and you can lock your investments for 5 years, it's better to be in mid cap or small cap or take a multi cap approach. But if you are jittery and you think that you don't want to withstand the near term volatility, it's better to be in large cap, which offers you a better risk reward.
But as you said, multi caps can also be an option
Definitely.
that can work in their favor.
In fact, multi cap and flexi cap, these offers investors a automatic way to move their investments from large cap, mid cap, or small cap whenever there's a better risk reward in each of these.
So, what would you suggest? How should the investors think about asset allocation today, especially when the valuations appear rich in some segments?
See, we've always been advocate of that, investor should have a proper asset allocation, irrespective of whether a particular market is very cheap or very expensive. So if you're looking at, it should have a mix of debt, equity, and precious metals. And I think that is where the thing is. So if you're looking at a long-term scenario, you should basically always maintain a proper asset allocation. Right now, it may be higher equities, but you should also have adequate debt and precious metals, which are also offering you good returns, especially when you look at historic basis. In these volatile times, even precious metals, the outlook is pretty positive. And we do think that they would add to the overall stability of the portfolio, not only the return part of it. So a balanced approach towards equities, debt, and precious metals, I think is a good way forward for investors to be.
But do you think it's easier for investors to maintain that balance you just spoke about in the times of volatile market and uncertainties? How do they maintain that balance?
You are right. It is very difficult for a normal investor to do it unless and until they're top of the entire macroeconomic things on the hand. So that is why you need to take expert advice. You need to go to either fund houses who are having asset allocation funds, or your financial advisor themselves can recommend you which assets to go in at what time.
So, financial advisors can be a great choice to rely on in those times.
Yes.
Absolutely.
But for individuals who are basically looking at direct investments in the mutual fund, something like an asset allocation funds could be a good category to be in.
Thank you so much for joining us and sharing those valuable insights.
Thank you.
So, as we have seen, while markets continue to navigate global and domestic shifts, staying disciplined, diversified, and long term focused remains key. Thank you all for watching and stay tuned to Kotak Mutual Fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.